In this week's episode of the Stockscores Market Minutes, I'm going to show you 3 ways to profit from a stock market crash. I'll do my regular weekly market analysis, figure out where the markets are likely to go near term. We'll look at the day trade of the week on SQ, and then we'll look at some of those charts for ways to make money from this market. Okay, so how do you make money from a stock market crash? If you'll remember from last week, I told you what to look for in terms of predicting market weakness, and many of those things came true last week, and we moved fairly significantly lower through the week. The question is there more weakness to come? We'll answer that in just a moment when I do my market analysis, but I want to talk about ways to profit from a weak market. Now, there's 3 primary ways. First is trading on individual stocks. You can short individual stocks or you can buy put options on individual stocks, and I'll do some examples of that later. The other is to buy inverse ETFs. And so there are a number of exchange traded funds that go up when the market goes down. There's a lot of different ones. The main 3, the most commonly traded 3, have symbols SQQQ, which is an inverse of the NASDAQ 100, and then you have SDS, which is inverse of the S&P 500, and then SDOW, which is the inverse of the Dow. And these will go up when the market goes down. Now, they are leveraged, which means they actually go up faster than the market goes down. There's a little bit of a caveat that you have to take with that, though, because if they are not working, if the trade is going against you, these things lose value over time. It's almost like time value decay. It's not really from that. It's from the rebalancing that goes into these things. The point is, they're not meant as long-term vehicles, so make sure you understand that they're short-term trading vehicles, and as long as the trade is working, you can stick with it. But if the trade is going against you, then they're actually losing a little bit of value every day, and that can work against you. You can Google or go onto YouTube and search for the value decay of leveraged ETFs, and there's people that have done great videos that explain how that works. And then the final one, of course, are the volatility ETFs. And these will go up when there is expectations for more volatility in the future. And it tends to be, not always, but it tends to be that they will go up when the market goes down. But really they're based on the implied volatility of the futures contracts. And they're a thing that trades in the market. So there's 3 that I tend to look at. VXX, that's Victor, X-ray, X-ray. And then TVIX. And then UVXY. And they all basically do the same thing. So pick your flavor and look at those. Now, what's key with these is that you want to use basic chart reading principles. And of course, if you've been on the channel for a while, you'll know that I teach a lot about how to read chart patterns, rising bottoms, falling tops, that sort of thing. And what we're looking for are ultimately breaks from low volatility. And if we're shorting, then we look for breaks through support from pessimism from low volatility. And if we're looking to buy some of these inverse ETFs, then we're actually looking to buy optimism through resistance from low volatility, because of course they go up when the market goes down. Now, I've got a couple of examples here to show you, and this is Tesla, and this would capture some of the basic chart principles of shorting a stock. And what I like to do with a collapsing market is to get much more short-term oriented. So you'll notice that this is a 10-day, 13-minute chart. And I think this is a great time frame to watch for short-term swing trading opportunities. Now here you can see there's pessimism. We can say that's pessimism because there's falling tops. We had support right here. And when the stock broke down through support on Friday morning from pessimism, from low volatility, this quiet sideways trading here, I told people in Active Live, the Stockscores service for short-term traders, I told everyone, Tesla is a good example of what you want to watch for as a short candidate. Now there's other days, here you have a break of what's called a pennant pattern, and a breakdown there led to a little bit of weakness. So these are the sort of quick trades that you can do, but if you want to trade things longer term, just take these same principles and adapt them to a longer term chart. But right now, because the market's already down quite a bit, I like this 10-day, 13-minute interval as a way to short sell stocks, or even the 2-minute interval if you want to be more of a day trader. Now, if you're looking at the longer term, or sorry, the inverse ETFs, and again using that short term time frame, this is a 15-day, 30-minute chart of SQQQ. Now, SQQQ goes up when the NASDAQ goes down, but it goes up much faster than the NASDAQ goes down because it's leveraged. So it has actually two areas where it can lose time value or decay of value, not only in the leveraged nature of it, but also in the fact that it's inverse, because these things have to be rebalanced every day. Now, here you can see that we have resistance here. We had rising bottoms, so that's optimism. We broke out from low volatility. And when I say low volatility, it's another way just basically to say the thing was going sideways. This is not low volatility, that's trending up. This is not low volatility, that's trending up. We want sideways, boring trading, and then breaking through resistance from optimism, rising bottoms, and that telegraphed the strength in SQQ, which really was weakness in the NASDAQ. And again, a nice, easy way to profit from the market going lower. And you can see from that signal at, I'll call it 22.75, it's up almost $3. So that's, what, 15% roughly? 15% gain in 4 or 5 days while the market was going down. So again, some great ways to trade the weakness in the market using some of these other ways of trading. All right, let's get into this week's market analysis, and we will start as always with the US markets. And here we have the S&P 500. And again, last week I suggested that you watch for breaks of support from falling tops. Well, we had that happen. We had an upward trend line, falling top, breakdown, and then we had horizontal support, falling top, breakdown, and that really telegraphed this weakness this past week. So hopefully some of you took advantage of that with some short selling or buying some inverse ETFs this week, because that was really the place to be. The question is, what's going to happen next? Well, there's a few principles to keep in mind. First of all, we are far below this downward trend line, and that means we're oversold. We're also coming into support, which means the market should bounce in the next few days, 1 or 2 days. There should be a little bit of a bounce off of support. So very short term, I think that the stock markets in the US are likely to make a little bounce. Now, do I think that means the markets are good beyond a few days? Not really, because when we look at this longer term chart, we can see a real problem for the markets. We've got an upward trend line that has been broken on the weekly time frame from a falling top. And that is exactly what I was telling you to watch for on the short-term charts last week has now happened on the long-term chart. So that is a long-term sell signal for the US stock market. Now, does that mean we're going to go down next week? Well, when we look at that short-term chart, which is what I would use if I was trying to make a short-term prediction, I would say good chance that the market actually bounces back this week, at least for a couple of days. But still, that longer term picture is pretty ominous because we have broken the upward trend line from a falling top. So the answer to whether you should be looking for buying opportunities or short selling opportunities really depends on the time frame that you like to trade. If you're short term oriented, I'd be watching for a bounce back. If you're long term oriented, I'd be looking at reasons to exit some of your holdings as they break down through support. So how you approach the market depends on the time frame you trade. Now let's take a look at the NASDAQ 100. Very similar situation. It broke an upward trend line recently from a falling top. It's now getting a little extended to the downside, running away from the trend line. That's called a parabolic trend, coming into support. It could have a really rough day on Monday or Tuesday, perhaps ahead of the election. We get some selling pressure, coming down another fairly healthy drop. But once it gets into this support zone, and given that it's oversold because it's far below the trend line, I do think we'll see a little bit of a bounce back. But again, the longer term picture on the NASDAQ is also not great because this upward trend line has been broken from a falling top. And that is a sign that we could see weakness in the weeks and months ahead. Now, the only saving grace is if we hold this support zone and we actually bounce back and come back up to resistance, maybe it can save itself. So right now I want you to be cautious, but we still have a little bit of hope if 260 on the QQQ can hold. Looking at the Russell 2000, which is the small cap sector, it doesn't have as bad a chart, but it also wasn't as good coming into the weakness that we've had in the last couple of weeks. So the small caps have essentially been going sideways for a while, and they're still looking like they're going to go sideways. And therefore, not a lot of great opportunity in that market, but there is the odd stock that can do well. And we do see a situation where we've got retail investors that sort of jump on the hot stories of the day or the week, and these hot small cap stocks can make big moves. You just got to be fussy about which ones you take. All right, on we go to the Canadian market. Kind of the same thing. You can see a parabolic trend to the downside, but this one has already broken down through support. You see here that support zone was broken already. We didn't even pause there, we just hammered right through it. So the Canadian market looking actually worse than the US. And again, here you've got a much more significant cycle of falling tops, and therefore I think you want to generally avoid Canadian stocks right now. There's always going to be the odd stock that's worth considering, but generally speaking, avoid Canadian stocks right now. Looking at the TSX Venture, which is heavily denominated in mining names, and gold has been holding up. We'll talk about gold in just a moment, but there is a little bit of a downward bias there. Notice the falling tops. And so if we break down through support, then we may see some more selling pressure in the TSX Venture. On to currencies, and the US dollar made a little bit of a jump last week, and in some ways we're jumping from a rising bottom, breaking this downward trend line. So that actually could be pointing to some strength coming in the US dollar. It's not a strong buy signal. You can see volume was very light, but it is nonetheless a little bit of a positive for the US dollar. And by no surprise then, if the US dollar showed a positive, then the Canadian dollar often shows weakness, and that's exactly what's happened. The upward trend line has been broken from a falling top, and that indicates the Canadian dollar is more likely to go lower than higher. Now, those dollar charts always affect things like gold, and with a little bit of strength in the US dollar, we see a little bit of weakness in gold. The upward trend line, which I would draw like this, has not been broken yet. We ran away from it. That's that parabolic run away from trend. It's come back to the trend. We haven't broken it yet, so it's still generally a bullish long-term chart. I would give it a neutral rating just because we've been going sideways or a little bit lower for the last 3 months. But no breakdown yet. We want to watch for a break of this upward trend line from these falling tops. And if we can make a strong break of the downward trend line, then we're probably going to resume that long-term upward trend. So really nothing to do in gold right now. We have to watch for the next signal. Oil, on the other hand, has made another breakdown this past week. You can see falling top, break of this upward trend line through support. I think oil is more likely to go lower than higher. On to the fear chart. We had a little bump up in fear this week. You can see that there. We really haven't broken the downward trend line on fear. We're kind of right at it. But if we get more weakness in the market in the next week or two, I expect the VXX to be a good vehicle to consider, because it could make some of those strong gains like it had made back during the COVID crash. Is there a reason to buy VXX today? I wouldn't, but I would be watching it very closely, because anytime in the next couple of weeks, it could give us another buy signal. So my ratings then, bearish long-term on the US stock market, given that upward trend line break. I'm neutral short-term because I do think it's a bit oversold, and after maybe another down day or two, we may see a bounce back. Perhaps on Wednesday after the election is over, we could see a little bit of a bounce back, but still longer term, I'm bearish. And the same for Canadian stocks. Gold, neutral on both time frames, and oil, now bearish on both time frames. So we have COVID, we have the US election, and the lack of COVID stimulus in the US, and those are all bringing the stock market down. Now, while the market is oversold in the short term, this week brought an important break of that weekly upward trend line, and that is a cause for longer term concern. We should expect volatility with a downward bias, and gold, as I said, is still holding that upward trend line, but it's a little boring. Oil has broken down and fear is rising. Now, the good thing for traders is that we've got lots of volatility in the market, and so if you are a trader short term, there's lots of volatility. You just have to trade with the trend or focus on those alpha stocks. Now let's jump over to my day trade of the week, which is all about trading short term, of course. And this week, the shorts were definitely the place to be. There was better opportunity, higher success rate because the market was going down. So on Friday, one of the shorts that signaled early in the day was Square, SQ, and you can see just how you can make money from a stock going down. The short sell signal came on the opening 2-minute bar. You'll see a little gray dot there. That is my bearish action candle. And that was a breakdown from low volatility on the 2-minute chart. Had a pretty good spike of volume as well. So that was a sign that this stock wanted to go lower. The capital required to take this trade was, for 70 shares, was $11,629, but you can leverage a day trade 3-to-1 if you like. And so that means you really only have to put up $3,876, and as long as you have good risk management, nothing wrong with using margin for these day trades. Now, at the end of the day, that trade was up 8.9 times its risk, which meant an $890 profit on a stock that went down. That represented a 22.9% return on a one-day hold. All right, this week, instead of doing a market scan, because I don't really think there's any great buying opportunities out there, we're just going to look at the charts of those three vehicles that I talked about earlier, those inverse ETFs, SQQQ, SDOW, and SDS. All right, so we'll just jump over to the Stockscores website, and I can pull up the chart. You can see here, I've got SQQ open right now. And what I'm going to do is go into the intraday time frame. So if you use Stockscores, you probably are normally on the daily time frame, which is what this is right now. I can click on the 10-day, and then I can click on 13M, which gives me a 13-minute chart of this particular instrument. Now, right now, there's a lot of volatility. See how if I draw a line across the bottoms and it's running away from the line across the tops, that means we have expanding volatility, and that means there is more uncertainty in the market right now. And that makes sense. We've got an election on Tuesday. Results should be out by Wednesday, although who knows if that will actually happen. And anyway, the market is definitely showing a lot of volatility. But what you want to watch for on this chart is a break from low volatility through resistance from optimism. And that happened earlier when we had this breakout right here, and that's what sent this up. Remember, this goes up if the market goes down. And we can apply those same principles to SDS. And again, I can make it a 10-day, 13-minute. And there you can see SDS made the breakout right back there on, I guess that was Monday, breaking from this boring sideways trading pattern. What we need to now see is another boring sideways trading pattern and then a break up out of it. Hasn't happened yet, but something to watch for. You can apply that to SDOW, which is an inverse of the Dow 30. And again, I can make this, let's say I want to trade it really short term. I can make it a 2-day chart and look at the 2-minute time frame. So there you have a boring sideways trading pattern through the day on Friday. If we were to break out from this on the 2-minute interval, we'd have a very short-term day trade to profit from the Dow going lower. And you can apply those principles to the VXX as well, which is the volatility index. I pull up VXX. I can make this a 5-day, 5-minute chart. You can see that's what this is right now. And again, looking for boring sideways trading. And then if we can break out through this, we have a little more resistance here as well. But if we can break out through that from optimism, then perhaps the VXX goes higher. So 3-4 things to watch. And right now, I think that's the best way to trade the market, because individual stocks on the buy side, you're going to have to really focus on alpha. And if you're part of Stockscores Active Live, of course, I help you with that every day. But if you're not, here's some things to watch using the Stockscores website. And you can look at charts on Stockscores for free, so give that a whirl. I want to thank you for joining me this week. Hope that you've enjoyed the video. If so, please click on the like button, subscribe to the channel, leave a comment, and most importantly, next week, trade well.